Today I'm going to talk about Kathmandu Holdings Limited. The Kathmandu brand was born in 1987. Kathmandu formed in 2009 as a public listed company, and Kathmandu is engaging in the design, marketing, retail, and wholesale of travel, adventure clothing, footwear, and equipment. And in this page, we are going to discuss why is it audited. Auditing is important as it ensures the business financial records are accurate and in accordance with applicable rules, including accepted accounting standard, regulation, and laws. And why do people want audit? There are three reasons. One is economic hypothesis. It comes from the perspective of company itself. Second, social accountability. It comes from the perspective of society and environment to the market. Third, political issue and the legal obligation. It comes from the law and regulations. And there are 5 benefits of having an audit. First, complaints. Second, business and system improvements. Third, credibility. 4. Detect and prevent fraud. 5. Better planning and budgeting. And there are also 4 related stakeholders: banker, employee, supplier, and customers. And there are 3 major inherent risks we'll be talked about in this page. First, inventory. Compared with the 2018 annual report, it also shows an increase in inventories. The greater of the quantity of inventory, the easier it is to make errors and misstatements during calculation and inspection. Thereby, it will increasing the inherent risk. Second, Kathmandu has operating through all over the world, so there are foreign currency transactions involved during the trading. Wrong exchange rate calculation and recording may result in errors and misstatements in the foreign currency transaction reserve account. Third, software. This company has its own unique product identification computer software system, so there are some potential risks in using computer software. For example, computer software may cause errors and problems and lead to data problems. And here are 3 major control risks related to the inherent risk. The first, the control risk should be considered as that does Kathmandu have a good stock management procedure. In order to reduce inventory, the company will sell inventory at a price below the cost, so the control risk is medium. 2. Foreign currency. When there are large currency transactions, all documents need to be confirmed and signed by the CFO, and so which makes the control risk is high. And third, software. Kathmandu has a special group to control and check those computer software programs, and there are very clear and strict regulations in the company to manage the behavior of employees to avoid information leakage, so the control risk is also high. Auditor implication. The first one is inventory. Accountants need more steps and procedures to confirm and count the quantity of the inventory. Same as foreign currency, the accountants also need more procedure in this certain area. For the last one, software, auditor team need to hire special experts, and auditors may also need to have a general understanding of the related information about these software programs. So the overall conclusion of the risk will be medium, as the inherent risk of this company are really high, but Kathmandu has some control over those risks, so the control risks are at a medium level. And part B, the inventory is a account has been chosen. According to the Kathmandu balance sheet, it shows the inventory remains for 2019 is about 122,000 millions, and which account for 82.9% of the total current asset and 20.6% of total asset. Compared with 2018, it also showed an increase in inventories and about 9.69%. For the general auditing procedures, substantive tests are procedures that have been used in this case. Substantive tests are procedures that provide evidence which support the fairness of each of management financial statement assertion and reveal monetary errors or misstatements in recording or reporting of transaction and balance. And in this case, because of the large number of inventories, Kathmandu need to check and confirm that the data and information are accurate and error-free. So substantive test is the most suitable procedure to be used in this case. The first special procedure is the analytical procedure. It's defined as evaluations of financial information made by a study of palatable relation among both financial and non-financial data. Therefore, this company can compare the data from previous year to see if there are material misstatement and error-free in the inventory in this year. Also, analytical procedures are less effective than tests of detail, but Kathmandu can still be used those modes to estimate the approximate calculation and measurement direction. Thereby, it could help narrowing the inspection of scope. And here is a chart to show the different percentage increasing for the different year. And the second specific procedure, it has been used a test of detail of transaction, and it mainly involved tracing and voting. Tracing transaction data from source document such as sale invoice to customer and bills from suppliers, and make sure all the document related to inventory has been correctly recorded in the inventory account. Watching a sample of the individual debit and credit in customer account for the transaction to the entries in sales journal and supporting documents such as sales invoice. Although the accountants will not check all the documents about the inventory, though they will increase the number of samples to achieve the expectation of analysts. So for the overall conclusion, in general, in this presentation had mentioned about Kathmandu's inherent risk and control risk, which are related to inventory, foreign currency, and software. Inventory had chosen as the significant item to discuss. Overall, Kathmandu is a good company with its own internal control and unique management. And here is a reference list that I have been searched. And thanks for your attention.